In this video, we are going to look at price action tactics you need to know as a forex trader. And as you can see, I'm already on a chart for synthetic indices, and here you can see if you draw the trend line, right, price retested and bounced back as we are looking at a downtrend. As you can see, we have the lower highs and lower lows, and the lower lows are being broken. And as you can see, we are on VIX 751s where we are marking the lower lows. And we shall be looking at the order block, the key zones, the area of liquidity, and many more point of interest you need to know as a forex trader, right? Going to H4, I marked an order block which has imbalance, which has grabbed liquidity, and which has broken structure, and it is unmitigated. By unmitigated, I mean price has not yet tested that area, and that is the zone I'm meaning. So we are trying to look for buys so that price can tap into that area before we continue moving into sell. If I draw a rectangle tool on that OB, this is what I'm trying to mean as we have a buy to sell setup. So let's go to daily as we are covering multiple time frames at the same time. At the same time, price is reacting from that daily order block, and you can see the consolidation around there, and that tells me liquidity is around there, where we have the buy side liquidity and the sell side liquidity. And guess what, I will use the nearest OB where price is expected to drop after tapping into there. All right, so you can see that already price had mitigated the daily order block above, I mean the bearish order block, and had to drop and got stuck or stopped at the bullish order block, right? And that will give us the pullback, and I will use the nearest order block as it was dropping to clear the liquidity above. Then I can move or join the sellers, right? I have marked the swing points, that is the lower high and the lower low, and if price closes above the swing high, I'll be looking for buys, and probably I'll be targeting the swing high above, all right? And we buy in a discount zone and sell in the premium zone. So what you do to know those areas, you can pull your Fibonacci level to know where the premium and the discount zone is, and that is when the price is below the 50% area, that is the discount zone, and when it is above the 50%, that is the premium zone for sales. You use the premium for sale, then the discount zone for buys, right? So let's try another asset, that is VIX 25. Let us begin from this side. This is a valid order block because it led the break of this structure here. Look at the left, I'm meaning this side. So this order block, this bearish, the last red candle, this bearish order, rather bullish order block that led the break of structure is a valid order block. It is a valid one because it led the break of structure. 2, it has an imbalance. When we talk of imbalance, you count 3 candles. This is 1, 2, 3. So the space in between this one and this one is what we call imbalance, okay? Even this one is imbalance, okay? So we expect price to come back and continue rolling up, but when it is violated, especially when it closes below or past 50% of that order block, it is considered to be violated, okay? So when it is violated, you can expect price to continue moving lower. So we are here currently, and you can see this trend line, and there is a support when you go to H4 or a higher time frame like daily. You can see price is stagnant here, it is not moving. The horizontal line is marking the previous lower low, and price tested my previous support zone and had to bounce back into the zone, and I'm expecting it to break the trend line so that I can ride with the buys clearing that trend line liquidity, right? Going over to jump 10, you can see I mark the support zone with blue, and I'm expecting price to tap there, then I can continue riding the buy. price, and before that, early in the morning, I was expecting price to give me a pullback so that I can enter into that simple or short sell, but price did not do that, and I had to let it go. We don't do out of formal fear of missing out, rather we just wait to what price will show us. Once we are able to understand, then we can join the sells or the buys. All right. And another technique I can tell you, in most cases, when you see big candles, when there is momentum in the market, like these candles, these bullish candles, look here, these bearish candles, do not expect price to respect your order block or give you an entry what we call a retest. No, in most cases do not retest your order block. What we will do, it will just consolidate. And if you have ever learned about the book which talks about the RBL and DBD, drop base drop, rally base rally, this is the technique that works when price is having a momentum. All right, so let's go to before I go to another asset, you can see here, if I zoom out, or if I go to H4, this is the swing point, the major zones or the support and resistance. As I was saying, this is the resistance, and you can see here, this is the row which had already been broken. So when price reached here, this high in between is considered to be liquidity. So once it is grabbed or taken out, you can begin looking for sellers as long as price begins to consolidate back within the range. Take note that price has been ranging and has grabbed the buy side liquidity using the yellow marked support zone, and is currently also dropping to clear another inside range liquidity so that we can ride the buys to clear the sell side liquidity. Going over to jump 75, you can see on a lower time frame price is preparing buys after rejecting the moving average and is expected to reach the yellow marked resistance zone. Going over to H4 as the higher time frame, you can see the previous high was broken and price broke the trend line. Short buy on the lower time frame is expected to clear the equal highs marked by the black call zone line using the yellow marked resistance zone so that we can ride the sells. Just remind, we have 6 types of liquidity areas. We have equal highs and lows, previous high and low, and we have trend line liquidity. We have previous days high and low, previous weeks high and low, then previous month high, and that's why my analysis is full of markups such as trend lines and swing points markups and those rectangle tools so that I can be eyeing where liquidity is residing. Getting back to J75 analysis, you can say I'm drawing a trend line and I'm expecting if price breaks it up, then I'll be buying up to the other zone, which is the bearish order block above, and that will be my resistance zone. Then I can look for long-term sellers. Going over to 500, I have marked my key zones with yellow zones, and I have used a breaker block which is in line or in confluence with the moving average and gave birth to buys. What was supposed to be an order block is violated when price is coming back and it respects it in a different direction. We call that one a breaker block. Okay, and with that being said, I also have the moving average, a 20 moving average. So I have the breaker blocker, I have the liquidity lying there, I have the moving average, and that is the confluence. Considering that if price comes back, it's likely to respect that order block, and that's where I can find my entry for a buy. Alright, so if you like this kind of content, please subscribe to my YouTube channel, like the video, and share it, and turn on the notification bell icon to be notified whenever I post new videos. Good luck.